联储的议息会议已经拉开了帷幕。在联储决定利率之前呢，市场各界的投资人呢是维持观望态度。如果美联储加息的话呢，市场会出现什么样的效应，以及投资者应该采取什么样的策略呢？著名的波浪理论呢，也是道氏理论的延伸。那么这一理论呢，是适用于任何交易资产、负债以及投资产品。我们就当前中美金融市场以及美联储加息问题呢，还有和经济息息相关的油价问题，对全球著名的金融机构Wave 波浪理论的投资专家 Steve Hashberg 进行了专访。Mr. Hashberg, great to have you here today. The Thursday is the moment the markets have been waiting for. So what should investors be doing? How do you trade this week?
Well, I'm not sure you can trade it before such an emotional event, but we take a different view at Elliott Wave International in terms of what you should be doing. And people have been focusing on the Fed and will they raise interest rates, won't they raise interest rates? But from our perspective and the way we view markets, the Fed really isn't controlling the environment or the interest rate environment and the stock market environment. For example, I'll give you a quick synopsis here. You know, the Fed tends to follow the market. And if you look at the U.S. Treasury bill, note, and bond yield, for example, 2-year Treasury notes bottomed almost 4 years to the date in 2011. They made their low point at 0.14%, and they've been rallying ever since then erratically. I think they're up over 400%. Same thing with the entire Treasury curve. The 10-year Treasury note made a record low back in July of 2012. It was a low that we put a special report out, a combined Elliott Wave Theorist and Elliott Wave Financial Forecast report calling for a rise in rates, and rates have been rising since then. So the Fed is simply following the market. The market's always out front. There's a trend toward a rising yield environment. Regardless of what the Fed does or doesn't do, I think that environment's going to maintain itself as we go forward. And so that's what we've been communicating and talking to our subscribers about, is this rising interest rate environment. And let's just forget what the Fed may or may not do.
So what happens when the Fed hikes interest rates?
Well, again, the Fed could hike, they could not hike. I don't think really anything happens. I think it may be some short-term emotional relief or expression around the event where you might get some volatility on a short-term basis. But the trend in yields has been up for several years now. I think that trend is going to continue. And so you have to position yourself in a rising interest rate environment. And if you look at not only Treasury rates, but rates across the board. For example, we follow very closely credit spreads, the spread between the yield on junk bonds and the yield on Treasuries, because that's usually been historically a good measure of the amount of risk on or risk off that's in the market, the amount that people want to take risk when they're looking at their investments. And that's been rising since 2013. That spread has been widening. In other words, people are getting a little bit more conservative, a little bit more pulling back in the way they view their investments. And it's a telltale sign. There's a little bit more risk that's creeping back in the markets. And that has implications for equity also. So across the board, rates have been rising in the United States. And I think that trend is going to continue regardless of what the Fed does or does not do. Markets have been sliding, and economics and the economic statistics that we read about in the newspaper are lagging indicators, not leading indicators. So you're not going to find out what the stock market is going to do in the future by looking at some indicator that measures something that happened in the past, whether it's a month ago or a quarter ago. So the market's been rolling over. It's been a slow process over the last several years. The Dow Jones Transportation Average topped, it made an intraday high in November of 2014. It's rolled over. Small caps have rolled over to the downside. The blue chip indexes, the Dow and S&P have rolled over. The NASDAQ is down from its high. So I think this is a worldwide global phenomenon. We're in a global bear market. And the economic measures, which had been measuring what happened in the past, are now going to start to weaken as we go forward, and stocks work their way to the downside.
Okay, what is your opinion on China's stock market?
Very interesting. Chinese stock market, Chinese economy's second largest in the world behind the U.S. Their stock market, which peaked actually in October of 2007, fell hard into 2008, never recovered that high. In other words, while the Dow and the S&P and the NASDAQ went to higher highs here in the U.S., the Chinese stock market's peak remains back in 2007, if you can believe that. I mean, it's been a number of years now. They completed a giant ABC rally. In Elliott wave terminology, an ABC is a counter-trend move. It was an ABC rally at just over 5,000 back in June of this year. That market is down still 50% from its high back in 2007. And I think the Shanghai Composite has rolled over and is now heading back to the downside. Eventually, Peter, Kendall, and I, who write the Elliott Wave Financial Forecast, have been looking for a move back below 1,800, back below the 2008 low in the Shanghai Composite. And I think that's a pretty good forecast. We stand by it. And right now, the stocks are on trend to get down into that, into or below that level.
So a weaker dollar also made the dollar-denominated crude more affordable to holders of euro. So what is your opinion about oil price in near term and long term?
Yeah, oil moves just like any other freely traded financial market based on psychology. Back in 2008, July of 2008, when oil was soaring, remember those stories about peak oil and how the world was running out of oil. People were forecasting $300, $400, $500 a barrel oil. But in July of 2008, it peaked at $147. The Elliott Wave theorist, right before that high, put out a special report stating that the high in oil was at hand and we were about to have a major bear market. And oil fell 78% in the next 5 months. In fact, I went throughout all the markets through history, and I think that was the biggest percentage decline in the smallest amount of time. Since then, we've had a recovery with the commodities, but that recovery has resulted in a lower high. And over the last several years, oil's been declining again. It got below $40 a barrel recently, down to around $37 a barrel. And the decline into that low traced out a pretty clear Elliott wave. So right now, we're rallying in oil on a short-term basis. I think that rally probably has more to go. Maybe it gets to $60, $80 range, which would be an Elliott wave target. But longer term, we're still very bearish on oil. I think in a deflationary environment, commodities and hard assets in general tend to go down in price, deflate, if you will. And eventually, I think oil gets back below $30 a barrel. But for the next several months and looking on a shorter term basis, I think there's a good counter trend rally, and I don't think that rally is over yet.
好的，感谢Elliott Wave 的投资专家为我们进行解读。就联储的加息问题呢，以及股市的讯息呢，请您继续关注我们的实时报道。